Well, g'day there traders and friends right around the world. Thank you so much for joining me in this weekend market update. I'm very excited, of course, to usher in the first full week of trading for 2015. Now, this first week of trading for the year 2015, I'm not too sure if it's going to be a pleasant one for the bulls out there around the world or for the people who, of course, are long the market. There are a lot of signals out there for the first week that we could see a little bit of a flat stock market or even a quite significant pullback to some lower levels of support across all three of the US market indices. When we have a look at stocks, when we have a look at ETFs, when we have a look at markets, they all behave accordingly. They behave, of course, according to Dow theory. They behave according to chart patterns, to candlestick patterns, to, of course, indicator settings, all of these types of things which we use to gauge, of course, stock sentiment or investor sentiment, and of course trader sentiment. We're trying to understand the psychology of market participants who are transacting in the marketplace. Now, there's one very prevalent type of chart pattern taking place on the NASDAQ, which is most important and which is most, pardon me, compelling to me. This is what we call some form of an exhaustion gap. There are three types of gaps when we trade the stock market. There are either continuation gaps, there are breakaway gaps, and there are also exhaustion gaps. Two of them, of course, are bullish or they are trend continuation patterns. The third or the later is what we call the exhaustion gap, and as the name suggests, it's really an exhaustion, pardon me, of the existing trend. That is what seems to be occurring on the NASDAQ. As you can see, we've rallied into a resistance level in late November to early December. We've pulled back, we've bounced, we've rallied back into that resistance level in late December. Now we're starting to see the failure of this gap, which was largely Fed induced during mid-December, could completely or utterly fill and very, very quickly start to retrace back to lower support levels. What does this mean for at least the tech stocks or tech traded stocks on the US markets? It means that for the week ahead, as we transition into trading beginning Monday, the 5th of January, there could be some significant or considerable downside action across stocks such as Apple, stocks such as Amazon, stocks such as Alibaba, Baidu, Caterpillar. Sorry to go off target. It will reintroduce a couple more tech stocks. We've got Google, we've got GoPro, Netflix, and also Twitter, largely Tesla also. So when I'm doing this market update and I'm presenting you with what could be a very well-induced type of sell-off to kickstart 2015, I want you to ask yourself the question, are you prepared for any type of pullback in the market? Are you prepared to at least sell short any particular stocks as we transition into Monday, the 5th of January, 2015? I hope you are all well prepared, because I do want the year 2015 to be a prosperous one for you, no matter where you are around the world and your trading strategy as at watching this recording. Thank you so much, ladies and gentlemen around the world, for watching this recording. I wish you all a very splendid week to start 2015. Let's make it a profitable one, and let's make it a very profitable year. All the best. Goodbye.